How's it, guys? Good day. How you doing? Welcome once again. So this is your boy Chitepa FX, representing Chitepa FX as well as African FX Seed. Okay, guys. So Chitepa FX is in conjunction with Africa FX Seed, and we've got a whole lot of ideas and working on some few things. Okay, guys. What I'm gonna do today, guys, is I just want to quickly go through the chart patterns, the patterns that I usually look for when I'm trading, the structures and how I see and how I look at the market whenever I'm trading, guys. Okay, so with that being said, as you can see, this is my watch list, guys. This is my watch list that I usually use. So I've got this watch list for a reason, because I'm not planning on changing my watch list for now until the end of the year. My reason to that is because I want to be able to understand the pairs and how they are behaving and how they are moving. So I just don't want to jump in a pair that I haven't been observing how it's been behaving towards certain periods and certain times. So why I've got like the yen pairs, as you can see, and then on the other, I've got a section where I say opposite direction. What I mean is I've got GA and I've got AU. So AU and GA, they negatively correlate. So when I know the other one is buying, the other one is selling, okay? And then I've got GU as well on that section. But usually GU, I'm supposed to put it on the yen pairs, but it's fine where it is. And then on the index, I've got US 30, I've got US 500, I've got US 100, okay? So these are the pairs that I'm only concentrating on. And obviously, you need a dollar index on your charts, guys. Why the dollar index? Because you're able to see how the dollar momentum is moving at a certain particular time. So you can be able to know how you be trading your dollar pairs and all that stuff. Okay. So what I'm gonna do, guys, is I'm just gonna quickly put a blank space. Okay, blank screen. Why? I just want to quickly show you a few patterns that I follow, guys. A few patterns that I'm looking for when I'm trading. So these patterns make up the strategy that I'm using. Okay, so these patterns I'll write down here. I'm gonna just put some words right here. Okay, so we say continuation patterns. Okay, so these guys are continuation patterns. Why continuation patterns, guys? Because why are we looking for continuation patterns? Because obviously the market moves in three phases. So we've got three phases in the market. So when we are doing our analysis and when we are doing our strategy and analyzing the market, we are looking at three phases in the market. So you've got your first phase, which is an impulse. Okay. You get the phase, which is an impulse, and then you've got what? A correction. So after a correction, what are we having, guys? We're having a continuation. Okay, sorry about that. I didn't like how that did. I didn't like how that. So it's impulse with correction. Then we have a continuation. Okay. So whenever we actually trading and we're looking for setups, so these are our very first beginning of pattern continuation. These are the first things we'll be looking for as our pattern continuation. So what pattern am I looking for right here? If I had an impulse to the upside, and then I had a correction. Okay. So what I'm actually looking at here is a bull flag. This is called a bull flag. Bull flag. Okay. That's a bull flag. So what is a bull flag? What does a bull flag do? What do we and how is a bull flag formed? Okay, and what do we expect to when we see a bull flag? So initially a bull flag is happening when it's in an uptrend, right? When price breaks out of a certain structure and creates a first impulse, which is an uptrend impulse, and then starts to correct. So we are looking at this kind of, so we're also using the three-touch forming method, okay? So we're using a three-touch method to know when we can be able to enter the position when we've seen a continuation pattern, okay? So we're using three-touch method. We're using a three-touch method to be able to know that at this particular time, this is what we can be able to do, or we can actually enter our trade, okay, guys? So here we are looking at a bull flag, and I want to show you how we can be able to benefit from a bull flag and how we can be able to enter a particular trade, guys. So with this type of setups, the most important thing that you need, guys, is patience. You just need patience and you need to wait. Okay, let's take, for instance, so you missed the entry when it broke out of a certain structure, that whatever structure you were looking at, you missed the entry. So you can't just jump in the middle of this impulse move, okay? You can't jump in the middle of the impulse move. So what you'll be waiting for is a continuation sign. So when you have an impulse move, you're waiting for price to give you a continuation sign. It can be on the 15 minutes, it can be on the 1 hour time frame. So, but the most important thing is you're gonna be waiting. And then you wait for price. So you see price reaching at a certain particular area, and it creates a what? A resistance. Okay, price creates a resistance. So I want to show you the three-touch method. Okay, so you've got 1, 2, you've got 3. Okay, so 1, 2, 3. It's completing the structure right there. Okay, you've got 1, 2, 3. So why is this very, very important, guys? Because your third touch has got the highest probability of playing out. So if you was looking for a continuation, for a buy in this actual pattern, you already know that you've been given an opportunity and you spotted a bull flag, which is a continuation pattern of bearish, of bullish momentum. So at this particular moment, what you'd be looking for is an entry. Personally, I'm more of a risk entry type of person. I like to be in the entries. Like, I like to take mostly of my entries are risk entries. So what that means is it's not really risky. It's just that you are trading within the pattern. Okay, it's different when you take a position that is out of the pattern and the structure and the momentum has already been confirmed. So a risk entry is just when you take a risk, an entry or a position within a pattern before the price can finally be confirmed. Okay, so at this particular time, this is how I would take this position. Okay, being a risk entry trader, I'll take this position from this level here. Okay, sorry guys, sorry about that. I'll take a risk entry trade, okay? Risk entry trade. I'm going to have a very, very tight stop loss, okay? Very tight stop loss, because the stop loss goes below your structure, okay? So this stop loss here, you can see it's about 20 pips. Okay, and what's our target? How do we know our target areas? If we want to take a position on a bull flag and the structure, the previous current structure, the previous market structure is not really showing us exact areas where we can be able to get out of a position. That is if we're looking at short-term position, okay? So the only way you can be able to know your target when you're entering your trade on a continuation flag, okay, you need to measure the height of the flagpole, okay? So your height of the flagpole is your target profit area, okay? Right at the break of this of the flag, that's where you put your measurement of your your target point. Okay, so you can see that the risk ratio reward is nowhere closer the same compared to when you wanted to take your trade from the break. Okay, so this is when you are being conservative as a trader. Okay, remember guys, trading basically most of the time is just all about psychology. The biggest part of trading is psychology. Okay, 90% of trading is psychology, 10% is technical. Okay, but we as traders, we're struggling with our psychology part, because only when your psychology is in shape, that's when you start to see more consistency in your journey. Okay, but that doesn't mean if you're not seeing consistency, that means your psychology is not okay. Sometimes it's just a curve. You've got a learning curve where you're learning and you're growing. As every trade you get is an experience. Every mistake you make in trading is an experience. Every loss you make is a lesson, guys. So don't ever take your losses as a way of losing money, but your losses are a way of what? Learning. Okay, guys. So I want you to look at the risk ratio reward and our stop loss level where it is. So if you took a risk entry on this flag, you've confirmed you had your first touch, second touch, and your third touch. On your third touch, you're putting your instant execution, or you're putting your order, okay, your buy order, okay, on the touch of the third touch, because that actually gives you more confidence that price is going to now break the upside. And another method that you can use, guys, this is another method that you can use. That is, if you're on the 1 hour, you just need to count the 1 hour candles that have formed during that correction. So the candles should be maximum 6 to 7 hours of correction. Okay, then you can be able to actually execute your trade. But that being said, sometimes you're in a position where you don't really need to wait for 6 or 5 hours of correction, because price has already impulsed. It's already given that momentum. It has impulsed and then forms a quick correction. That is when you pick the correction on the 15 minutes. So it's very different when you're picking a correction on the 15 minutes as compared to when you're picking a correction on the 1 hour. Okay, so your correction on the 1 hour, it's more on the longer term trade setup and forecasting. So obviously, if it takes 6 hours for a correction to complete, that means the trade you're looking at is a long-term trade. But if you're looking at a short-term trade, as I'd strongly advise you look at corrections that are happening on the 15 minutes and the 5 minutes as well. Okay, so this was it, guys, on the bull flag. So we just did a bull flag, which is a continuation pattern, a bullish continuation pattern. Okay, so now we're going to do a bear flag. But another thing that I wanted to say is there is no difference in a bull flag that is a flat one and a bull flag that is steep. Okay, so I'll show you that, guys. So you've got an impulse, then you've got a correction. And then you've got a continuation. So look at the difference in these types of flags. So this is your steep flag. Okay, this is your steep flag. And your other one is what? Your other one is your flat flag. Okay, guys. So you've got your steep flag and you've got a flat flag, but they are all bull flags. Okay, they are all bullish continuation flags. And the only difference with them is sometimes a steep flag, you need to be very careful when you're entering a steep flag, especially from the low. If you want to enter it from the low point, reason being because it might just tag you in. It might just tag you in. So what I'm saying is you might enter from the low here, and then price comes to the top there. It doesn't break that area. It bounces back again to your low entry, and then it just trickles, goes down. So what I wanted to show you is this. So was this one. So instead of price breaking that level, it just trickles down, forms a much extended correction, and then it breaks out eventually, still in your same direction. But the only difference is this would be more of an extended correction. Okay, guys. So this will be your extended correction. But the other styles you can use on these extended flags, you might see something that might look like a mini double bottom or an arc forming within that area. You see, like if we were given a steep flag in this particular manner, and then within that steep flag we went to the smaller time frame, and then we spotted an area that looks, oh, that is a double bottom, definitely we would know that price is now ready to move, because a double bottom, when you see a double bottom formation, your next level is targeting in a new high to be formed to complete that double bottom formation. Okay, guys. So at this particular moment, you would know that you need to place your trade there. Okay, you need to place your trade, and then your first target. Okay, your first target will be. So this is different now. Your first target will be the 90% correction of the flag, of the steep flag, because this flag was a bit steeper and it was extended. Okay, so that will be your first target. And then you'll be also maybe targeting your flagpole. Okay, let's say you are the very long flagpole. Okay, guys. So you'll be targeting those areas. So you're going to have your first TP, and then you're going to have your second TP, guys. Okay, so this is very simple, but it's simplified. It's simple and simplified, guys. So you'll be looking for this type of patterns to take on your continuation of what? Of your bullish continuation. Once when you see a breakout, you're looking for a flag. You're either looking for a flat flag or you're looking for a steep flag for a continuation. Okay, guys. So that's what I had for you on the steep flag. Okay, now we are going to just quickly go to we're just quickly going to go to bearish flag. Okay, we're going to do a bearish flag now. Okay, we're going to do a bearish flag, guys. I'm just going to delete these. Sorry. Delete. Delete. Okay. Okay, guys, so we are still on continuation pattern. Now we're going to do a bearish flag. So a bearish flag obviously is coming from it's when you're coming from a bullish trend and then going to a bearish trend. Okay, so when the trend has actually changed, that's when you're getting your bearish flag. So our bearish flag is your impulse from the downside, from the upside. Okay, that's your impulse from the downside. So we're going to start with a flat bearish flag. Okay, guys. We're going to start with a flat bearish flag and continuation. So still the same concept, guys, like we did on the same concept like we did on the bullish flag, on the bull flag. Actually, let's not confuse so many things. So like that, okay. And then at the same point, I'm going to draw a steep bearish flag, okay, a steep bearish flag, okay. A steep one, guys. Remember what we said about steep flags? They might trickle, and then tag you in and tag you out. So you need to be very, very careful when you want to take your trade on your steep flag, okay? So these two are just the same. They're just the same type of flags. The only difference is this is your flat bearish flag, and this is your steep bearish flag, but they are all bearish continuation patterns, okay? So after a bearish impulse move to the downside, you're looking for a what? For a correction, and then you enter in a continuation. So these are just the two parts of continuation patterns that I'm looking at right now. I'll try to be very quick so we don't spend so much time on just two patterns when we're supposed to look at other patterns as well. Okay. So we are now currently looking at continuation patterns, bearish flag. Okay, guys. So with this type of flag also, it's the same concept that we did on the bull flags. Okay, guys. Where did I take my page? Okay, guys, the same concept we did on the bull flags, the same concept on the bearish flag. The entries is all the same as well. So for conservative people that like to be more conservative when it comes to trading, okay, so that's your entry. Your TP is the height of the flagpole. That's your TP. Your stop loss above structure. Okay, so on this type of entry, the only disadvantage is your stop loss is too wide as compared to if you took a risk entry right at the top of the structure. If you took a risk entry, and how would you be able to see that this is a risk entry? What could help you to be able to see that you've got a risk entry there, especially if you're trying to trade a flag? Okay, so you are looking at what? Obviously, you're looking at a double top formation. Okay, so on your bull flag, you're looking at a double bottom. Okay, and then on your bearish flag, you're looking at a double top formation. So a double top formation is a bearish reversal pattern as well, just like a double bottom formation is a bullish reversal pattern as well. So you see, guys, already within one pattern, you've already got other patterns within it. So basically, our strategy and how we trade is more or less focused on patterns and structures. Okay, so we're trading structures and patterns as well as price action. Okay, so I just explained how these two trades are different, looking at their risk ratio reward. Okay, so the one trade is the risk ratio reward is 1 to 4, and then the other trade, the risk ratio reward is 1 to 2. So you see the difference, guys. So this is why sometimes I like to actually take risk entries as to more of reduced risk entries, because reduced risk entries I've got much of a wider stop loss as compared to a risk entry. Okay, so we are going to jump into the chart, and then I want to just be able to show you exactly what I mean by certain type of entries and what I mean by spotting either bullish or bearish flags, because sometimes, honestly speaking, these type of flags, they are not picture perfect. Okay, guys, these type of flags are not picture perfect on the charts. On the charts, it's a different story. Okay, when you go to the charts, you don't get to see this type of picture perfect flags. Okay, it's a little bit different, but I'm gonna quickly just jump on the charts. We're going to pick up any pair that you'd like, any pair. Like right now, we're on the dollar index, so we're going to use the dollar index to support bearish and bullish flags. Okay, guys. So the same thing with your steep flag. You can see on the steep flag also we had a double top. So this is the double top formation. For some people, they wouldn't really see this, but this is price, okay, catching people on the wrong side. Imagine if you were trading and said you thought you didn't see this bearish flag, okay, that is a continuation of a downward move, and you thought price is just ranging or it's consolidating. Yes, obviously the price will be consolidating and correcting. Okay, but now you looked at this particular area and you thought this was your resistance. Okay, so now when you're trading this as your resistance and you're trading that area down there as your support, what are you gonna be doing? So when you see a breakout there, you're automatically thinking, I've got a breakout and then a retest. Okay, so you will see a breakout and a retest. For most other types of trading strategy out there, okay, so this will be your retest, and then so what's going to happen if you think this is that's your retest of your bullish momentum? Okay, so you take a buy trade there. So look at what happens there now. You take a buy trade, targeting, I don't know where you'll be targeting, and then you even put a big stop loss. Okay, so this is the difference between somebody who's understanding what is being formed at a certain particular time versus somebody who's thinking they're trading support and resistance in a certain particular type of way. Okay, saying you'll be saying you just had a breakout, and then this is your retest. Initially, this is not a breakout. Actually, this breakout, it's coming on top to complete the touches on what? On the trend line, on the resistance trend line of the bearish flag. So once when it hits that level there, obviously for the type of trader that we are, we would know that now there is a confirmed entry, because why? It has already, the liquidity has already been collected from the people who thought this was a breakout and the retest, and they've taken that trade. Okay, that's when we enter and take the position. We enter there, take our sell position. Okay, target length of flag. So already you've got a target, and you've got a very reduced risk ratio reward, where you have your stop loss that is very minimal and your rewards are very high. Okay, so that will set you apart, different from the way other setups would be. Okay, guys. So this was a very great one. What are we going to do is I'm going to just quickly jump in on the charts. Okay, and then we are going to look for those opportunities, guys. Okay, I'm going to jump in the charts and look for those opportunities. So guys, what I do is top-down analysis. One day. So we're going to do top-down analysis, guys. This is the dollar index. Remember, what are we looking for? We are looking for continuation patterns. What are the continuation patterns that we are looking for? We are only looking for a bull flag and the bearish flag in this particular time. Okay, so I'm going to try my best to see if I can be able to support those type of flags, and then we can perhaps look for our entries. Okay. So remember, guys, we are on the what? We are on the daily time frame. Okay, daily time frame. I wanted to do something that I usually do with structures and patterns. Okay, just so you guys can be able to also get an idea of how am I trading and how am I looking at structures. So I first mark up my lowest point and my highest point. Okay, this is my lowest point, and that was our highest point there. Okay, that was our highest point there, guys. I would like to dig in deep and talk about other things, but the only problem is I'm seeing certain patterns here that I would like to show you guys, but I didn't actually explain them when I was doing the first bullish flag and the bearish flag. So I don't want to jump in to do a lot of things, otherwise it will end up confusing some of you. Okay, guys. So I just wanted to be able to mark up certain patterns. So I've already spotted one pattern here, guys. Let's start from here. Okay, so remember what we said, that sometimes the patterns are not picture perfect. So I want you to pay attention with what happened with price. Look at, we had an impulse down, okay? And then we had a correction. Okay, so look at how many touches we had. 1, 2, 3. Okay, 1, 2, 3. These were perfect confirmed touches. And what happened after those 1, 2, 3 touches? You could see that price was tickering inside the structure, showing you now proper sign of entry there. Okay. And then we can mark that area, because we're trying to mark our flag that we were talking about, guys. Okay. Okay. So what do we have there? We have a bearish flag, a continuation pattern, guys. So imagine, even if you saw this type of setup, you've seen that price has come from where? From an impulse impulse movement to the downside. So we were bullish and then we impulse to the downside, started forming a correction. Okay, so for a conservative trader, you'll be looking for an entry at the break of the structure, stop loss above the structure. And what is your take profit target? Like we said, the flagpole. Okay, the flagpole is your take profit target. Did we hit that take profit? We did. It's that simple, guys. It's that simple. When you are spotting these things, when you see them, you cannot be able to unsee them again. Okay. Once when you see them, they get stuck in your head, man. These are the patterns you'll be looking for over and over again, over and over again. Okay, because every time when there's an impulse, there's a correction. Okay. Sometimes price won't hope it's not going to really show us so much corrections that are picture perfect like what we just saw. But that was a very, very, very nice example of a flat flag. Okay, so what we saw there was a flat flag, like we explained about a flat flag. So now what I want to show you guys is a steep flag. Okay, a bearish steep flag. Okay, so here is a bearish steep flag. Again, what happened? We had an impulse correction and then continuation. Can you see that, guys? We had an impulse, correction, and continuation. So we had a perfect picture of a flat flag, and then we've got a perfect picture of a steep flag. You just need to be able to see these things and be able to notice them, okay, guys? Because sometimes, prices is not really gonna show you exactly those picture perfect setups, but over times you'll be able to notice and to be able to find these setups. Okay, so on this same steep flag as well. Sorry, I need to pay for my trading view subscription, guys. Sorry about that. So your entry is way at the break of the structure, but remember I told you guys my entry will be what? A risk entry. Can we get a risk entry there? Yes. How can we get that risk entry? I've already seen a double top there. There is a double top, guys. There is a double top. Remember, I said you're going to take your risk entry within the structure if you see something like a double top or you see a double bottom. That is on your bullish flag, okay? But on the bearish flag, you'll be looking for what? For a double top, okay? So now, my first entry would be at the double top with a very, very minimal and tight stop loss, because if price breaks that structure there, then I know that the structure has been violated and the trend is changing. What did we say our target was, guys? The flagpole, okay? The height of the flagpole, okay? That's our target. See where our target is, guys? If you were on this trade and you're managing it, you'd have been able to even capture all these levels here, but you need to be conservative and be content with whatever target level that you set. So if you set a target level, once price hits your target level, you need to close your trades, and either if your trading plans allows you to take 2 or 3 trades or 4 trades in a day, once when you've reached your trading plan level on trades that you should take, then you can be able to just call it a day. And whether your day was full of losses, or you had break-evens, or you made lots of profits, but you need to be able to stick to your trading plan, because your trading plan is your only friend, okay? And it's the one thing that will be guiding you, whether you're drifting away from your plans and going in the other way, or whether you're over trading or things like that. So that's how we would track that trade, guys. Okay, it was a very, very nice one. And even here we still have a continuation, okay? But now the only problem here, guys, is I like how this continuation is. steep flag, okay, but not really like a steep flag. This is an expanding triangle. Okay, I need to actually explain about these ones also. So I'm gonna make another video where I can be able to explain about other patterns that we're looking for, which is the inverse head and shoulder, the head and shoulder pattern, the expanding triangle, the falling wedge, the rising wedge. So I need to be able to actually do a video about those, because even right here we had a falling wedge. Okay, we had like a falling wedge. We had a falling wedge there, guys. So that is why you see price bought, okay, because a falling wedge is a bullish reversal pattern. So I want to be able to talk about these things as well, so that you guys can be able to pick them up and understand them as well. So look at how we've got a head and shoulder pattern there. Okay. So what is your head and shoulder pattern? What is your head and shoulder pattern, guys? So your head and shoulder pattern is your bearish reversal pattern as well. Okay, so when you are in such areas and you see a head and shoulder pattern forming in that type of structure, in this particular structure, remember, this is an expanding triangle, and then expanding triangles, most of them have got great movements of breakout to the downside. Okay, guys, so this is a very, very good setup. And another method, another way you could have entered this trade was when that head and shoulder pattern formed, price came back to retest that head and shoulder pattern. Okay, it came back to retest the shoulder line. Okay, so that was the entry there that you could have had. That's the entry. Stop loss just above that structure. If you get stopped out, you scale in again. You go back to the charts, analyze again, and find entries. Okay, guys. Okay, so that's another good entry there we had. So what I'm gonna do is I'm gonna prepare another video, then I'll be able to just talk about other patterns and structures, and we can be able to move on that path. So guys, this was once again your mentor, Kitepa FX, representing Kitepa FX and African FX Seed. Okay, so I'm signing out. Cheers, guys.